Welcome to another deep dive. Today we are unpacking a company that I guarantee is sitting right there on your laptop or your phone.
Oh, yeah.
I probably use it. You might even begrudgingly rely on it once a year.
Yeah.
But the sources we're looking at today suggest you probably don't really know what they're up to. We're talking about Intuit.
Right. Stock symbol INTU. And it really is that household name that everyone just completely underestimates.
That's exact. I mean, when I say Intuit, my immediate association is, tax day, it's panic, it's receipts stuffed in a shoebox.
TurboTax.
TurboTax, exactly,
Yeah.
or QuickBooks. But we've got a really interesting stack of research today. Specifically, there's a new research report from Compasscope dated February 23, 2026, and we're pairing that with a transcript from Intuit's Q1 2026 earnings call.
And honestly, looking at those two documents, calling them just a tax company feels like calling a smartphone just a calculator.
That is a perfect analogy, because the sources paint this picture of a company right in the middle of a massive metamorphosis.
Yeah, they're trying to evolve from a utility, a tool you just pick up to do a chore into what they're actually calling a global financial technology platform.
A global financial technology platform. That sounds expensive.
It is. But the ambition is just huge. And I think the mission of this deep dive today is to figure out if they can actually pull it off.
Right.
Can they transition from a software company that helps you file a boring form to an AI-driven system of intelligence that literally runs your entire financial life every single day?
So that is the big question on the table.
Yeah.
And to answer it, we have a pretty strict agenda today. We are going to strip the engine down.
Yep.
We need to look at the actual business lines because it's way wider than I thought. They'll look at the battlefield, who's trying to take their market share.
Competitors.
Exactly. We'll check their battle plan for growth, look at the execution risks that could trick them up, and then we'll check the scoreboard from that recent earnings call to see if this grand plan is actually working.
And then we'll wrap up with the keys to watch so you know exactly what metrics to look for over the next year or so.
Perfect. So let's just get right into it. Topic 1, the business itself. I mentioned the big names, TurboTax and QuickBooks, but in that Compasscope report, they talk about these core pillars. Break down the empire for us. What does Intuit actually own?
So Compasscope categorizes the business into a few very distinct kingdoms. The first one, and honestly the most interesting one right now, is the SMB and mid-market segment.
Small and medium businesses.
Right. Officially, they call it the Global Business Solutions Group.
Very corporate.
It is, but it's the absolute powerhouse of the company. It's anchored by QuickBooks, which we all know is the accounting software, but it is not just a digital ledger anymore.
Right.
This segment includes Mailchimp for marketing, which was a massive acquisition they made a few years back. And this is the really crucial part. It includes the money ecosystem.
The money ecosystem. I saw that in the notes and I was surprised by that. This isn't just, recording the numbers on a spreadsheet. This is actual money movement.
Precisely. And this is the part I think a lot of people miss. Intuit isn't just the scorekeeper anymore. With QuickBooks payments and bill pay, they are essentially the bank.
Wow.
If you're a small business, you send an invoice through QuickBooks, your client pays that invoice via QuickBooks, and then you use that exact cash to pay your employees through QuickBooks payroll.
So they're capturing a tiny slice of basically every single dollar that moves through that business.
Exactly. They want to be the operating system. If QuickBooks is the brain, the money ecosystem is the blood.
That is a very sticky web to get caught in. Okay, so that's the business side. What about the consumer side?
That brings us to the second pillar, which is consumer tax. This is TurboTax. But again, the sources highlight a pretty major shift happening here. It's no longer just DIY software where you type in your W-2 and just sort of pray you didn't mess up.
Which is usually my strategy.
Well, they want to change that. They are pushing really hard into what they call TurboTax Live. This connects you with human experts, actual CPAs and enroll agents who either jump on screen to help you fix your mistakes or they just do the whole return for you.
So they're moving from a pure software play to a service play.
Right. It's a higher price point, but it builds higher trust. Then you have the third pillar, which is consumer finance, and that is Credit Karma.
I use Credit Karma just to check my credit score. I honestly didn't realize it was such a big part of the Intuit machine.
Oh, it's their data goldmine. Because it's not just monitoring your score, it's a full marketplace. They offer personal loans, credit cards, auto insurance. It gives Intuit this massive 360-degree view of a consumer's financial health.
Got it. And the last pillar.
The fourth pillar is ProTax. That's the high-end, complex software that professional accountants use to run their actual firms.
It really is a closed loop, isn't it?
Yeah.
You have the small business books, you have the personal tax returns, and the credit history. That is a staggering amount of data.
It is massive. In fact, the earnings call mentioned they are sitting on petabytes of financial data. And that data is what fuels this huge AI push we keep hearing about.
Let's talk about that.
They have this proprietary system called Geno. It's their generative AI operating system.
I really wanted to ask about that because everybody claims to have AI right now. Like, I'm pretty sure my toaster claims to have AI. Is Intuit's AI actually fundamentally different?
The Compasscope report strongly suggests it is. And the key phrase you need to remember here is done for you.
Done for you.
That's the huge philosophical shift. In the past, software was a tool that you had to use. You had to pick up the hammer and swing it. Intuit wants to deploy AI agents that actually do the work for you.
Give me an example of that.
Imagine an AI agent that automatically categorizes your expenses, drafts your invoice emails to clients, spots a cash flow anomaly, and then suggests a fix before you even log in for the day.
So it's not just an assistant, it's functioning like an employee.
That is the ultimate goal. Moving from helping you do it to doing it for you.
That is a very powerful promise to make to a business owner. But they definitely aren't the only sharks in the water.
Let's pivot to topic 2. Competitors. Who is actually trying to stop them?
It's a multi-front war, and their enemies are incredibly formidable. It really depends on which part of the empire we're looking at. In that SMB and mid-market segment, Intuit is deliberately trying to move upmarket.
Define upmarket for us in this specific context.
They want to serve businesses with 10 to 100 employees. So we're not just talking about the solo freelancer or the local bakery anymore. But when you step into that ring, you are fighting the enterprise heavyweights.
Like who?
We're talking Oracle NetSuite, Microsoft Dynamics, SAP.
Oof. Those are giants. You don't just casually walk in and push Oracle around.
No, you do not. And then on the marketing side, with Mailchimp, they are fighting HubSpot, Salesforce, Klaviyo. These are specialized, highly aggressive competitors who wake up every day thinking only about marketing.
And what about on the consumer side? You've got the legacy players like H&R Block for taxes, and then you have the really agile fintechs, SoFi, Cash App, Chime. They are all fighting fiercely for that banking wallet share.
So they are completely surrounded on all sides. Why don't customers just switch? If I'm a growing business owner, why stick with Intuit if Oracle is calling me? What's the moat?
The Compasscope report identifies 3 structural competitive advantages that keep Intuit safe. The first one is high switching costs. Have you ever tried to move 5 years of accounting data to a completely new software system?
I would literally rather get a root canal.
Honestly, a root canal is faster and probably less painful. It's a total nightmare. You risk losing historical data, you break your payroll integrations, you mess up your tax history.
Right.
Because of this friction, QuickBooks has about 85% market share in the US for small businesses. Their retention rate is over 80%. Once you're in their system, the pain of leaving is just too high to justify.
Friction is their best friend.
Exactly. The second moat is ecosystem lock-in. If you use QuickBooks for your accounting and Mailchimp for your marketing and Intuit for your payroll, ripping all of that out is basically open heart surgery for a business. It's not just deleting an app off your phone.
And the third moat,
The accountant channel.
the gatekeepers.
Precisely. Intuit has spent decades courting accountants. If you go hire a CPA right now, the first thing they'll probably say to you is, we use QuickBooks. It's the industry standard language. Intuit leverages that deep trust to keep the competitors locked out.
That makes total sense. You are going to listen to your accountant. But as we know, investors don't pay a premium just for safety. They pay for growth. Which brings us to topic 3, growth strategy. How do they actually plan to get bigger from here?
The documents outline a few major big bets. The most critical one, the one their whole future valuation might hail on, is this mid-market push.
There's that Intuit Enterprise Suite I saw mentioned in the earnings call.
Yes, IES. And the strategy here is really interesting because it's essentially a pricing play. An Oracle NetSuite implementation can cost a company tens of thousands of dollars a month. It's highly expensive and highly complex. Intuit is coming in at a price point of just several $1,000s per month.
So they are deliberately trying to fit right into that gap.
Exactly. They are targeting this massive blue ocean that sits right between cheap DIY tools and those massively expensive enterprise resource planning systems.
Yeah, Mika.
If they can capture those companies that are too big for basic QuickBooks but too small for SAP, that is a massive revenue unlock.
What is their next big bet?
The done-for-you AI we were talking about earlier. But here's the twist. They want to heavily monetize it. They believe businesses will pay a premium subscription fee for AI agents that actively manage workflows, like an accounts payable bot that literally handles paying your bills.
So they're selling it not just as a cool software feature, but as a paid employee replacement.
Precisely. Then there's TurboTax Live. The goal there is converting those low-value DIY filers into high-value assisted customers. And for Credit Karma, the whole strategy is year-round engagement.
Right, because usually you log in to check your taxes in April, and then you completely forget your password until next year.
Exactly. But money happens every single day. They want to use the tax data they already have on you to push hyper-personalized financial advice.
Like what?
Like sending you an alert saying, hey, use your projected tax refund to pay off this specific high-interest credit card. If they can provide that kind of value, you open the app 12 months a year, not just in April.
And what about Mailchimp?
That is currently the turnaround project. They are trying to reaccelerate growth there by selling it heavily to those mid-market customers we talked about and integrating it deeply with financial data.
How does it work in practice?
Imagine sending a marketing email campaign based specifically on which of your clients actually paid their invoices on time last quarter. That's the integration they want.
That's incredibly smart. But as always, we have to look at the shadows here. Let's hit topic 4, execution risk. Play devil's advocate for me. What could go wrong?
The Compascope report does not pull any punches here. The absolute biggest risk is that mid-market execution is really, really hard.
Why is it so hard? Is the software just not good enough yet?
It's not really a software problem, it's a sales problem. Selling a $50 subscription on a website is easy. The customer just clicks buy. Selling a $5,000 enterprise suite requires a dedicated sales team.
Right, it's a totally different motion.
It requires long negotiations, custom contracts, implementation specialists. Intuit has to build a hardcore B2B enterprise sales culture basically from scratch, while they are actively fighting Microsoft, who has been doing enterprise sales since the 90s.
That is a massive cultural shift for a company.
It is. The second major risk is Mailchimp. The report explicitly notes that Mailchimp's growth has been pretty underwhelming recently. It's been flat to down. If they can't integrate it properly, or if HubSpot just continues to eat them alive in the market, it becomes a $12 billion anchor dragging the whole stock down.
And I saw a note in the research about the government, something called direct file.
That's the big regulatory risk. The IRS has been piloting Direct File, which is a completely free government-run tax filing system.
The government doing taxes for free. That sounds like an absolute TurboTax killer.
It is an existential threat to the low end of their market. If the government makes it genuinely easy and free to file directly on their website, Intuit loses that massive funnel of new, younger users.
And finally, what about the cost of all this AI development?
It's incredibly expensive. Running these massive generative models, the compute power, the R&D, it costs an absolute fortune. If customers ultimately decide they don't want to adopt these premium AI features, Intuit is stuck holding a massive compute bill with no new revenue to cover it.
High stakes all around. Well, let's see how they are actually handling the pressure right now. Topic 5, the scorecard. You reviewed the Q1 2026 earnings call transcript. What are the actual numbers telling us?
The headline numbers were actually very strong. Total revenue was up 18% year over year.
18% for a company of this massive size is really impressive.
It's serious acceleration. TurboTax Live revenue grew 51%.
Wow.
Yeah, that completely validates the strategy of moving people to assisted tax filing. It is working. And Credit Karma grew 27%, which means they are actively gaining market share in loans and credit cards, even in a somewhat tricky macroeconomic environment.
So the core financial engines are definitely firing. But reading through that transcript, there were some things that weren't just standard financial metrics. There were some real surprises.
There were 3 big updates that really stood out to me. First, the OpenAI partnership.
Oh, this is fascinating. Tell us about this.
So CEO Asan Godarzi talked about this directly. Intuit apps are going to live inside ChatGPT.
Wait, explain how that actually works for a user.
So imagine you are just chatting with ChatGPT and you ask a natural question about your business finances. ChatGPT can now securely pull your live QuickBooks data and give you a personalized, accurate answer right there inside the chat interface.
So they are basically going wherever the eyeballs already are.
Exactly. It solves the distribution problem. If everyone decides to use ChatGPT as their main interface for the internet, Intuit ensures they are the financial engine running underneath it.
That is huge. Okay, what was the second surprise?
Physical presence. We usually think of Intuit as a purely digital software company, but they're opening 600 local tax expert locations, and they're even opening a massive flagship store in New York City.
A physical TurboTax store, like an Apple store, but for your taxes.
Essentially, yes. They realize that to truly compete with H&R Block for those highly complex, high net worth tax returns, some people just absolutely need to walk into a physical room and look a human expert in the eye. They are going brick and mortar to build that ultimate trust.
That is a fascinating pivot, going retro to go forward. And what was the third big update?
Mid-market traction. They reported that contracts for the Intuit Enterprise Suite, that IES product, grew 50% quarter over quarter.
A 50% jump in 1 quarter.
Keep in mind it's off a relatively small base, but it shows the demand is absolutely there. And more significantly, they are signing major partnerships with top accounting firms. Firms like Aprio and Cherry Bekaert. They are partnering with them to sell IES on Intuit's behalf.
On what?
They are financially incentivizing the gatekeepers to push the new product to their biggest clients.
Did they give any concrete numbers on those AI agents? We talked a lot about the done-for-you concept, but is it actually working in the real world?
They did, and this was really cool to see. They claimed the accounting agent is currently saving customers an average of 12 hours a month of manual data entry work.
12 hours. That is a day and a half of work you just get back.
And the payments agent is actively helping businesses get paid 5 days faster. For a small business, cash flow is literally oxygen. Getting paid 5 days earlier is a total game changer.
That is the ROI right there.
Yeah.
That's why you pay for it. Was everything completely rosy on the call, or was there a blemish?
There was definitely a note of caution. Mailchimp revenue was down slightly. They admitted it openly on the call. They do expect it to bounce back to double-digit growth by the end of fiscal 2026, but right now, it is undeniably the weak link in the chain.
Okay, so Mailchimp is the squeaky wheel, which brings us perfectly to our final section. Topic 6, keys to watch. For the listener, as someone keeping an eye on this space, what should they be watching over the next 12 to 18 months?
Based on everything in the Compasscope report and that earnings call, there are 5 clear indicators to watch. Number 1 is mid-market success. Can IES actually steal meaningful market share from NetSuite? Don't just look at the launch press releases. Watch the actual adoption rates. Are real enterprise companies actually switching over?
Right. It's all about execution there.
Number 2 is the regulatory environment. You have to watch the news for any IRS direct file updates or any new AI regulations that could impact how financial advice is legally given.
Got it. What's number 3?
The Mailchimp turnaround. They promise the market a bounce back. If that revenue line stays flat or goes negative again next quarter, that is a glaring red flag that the whole integration strategy might have failed.
A broken promise to Wall Street is never good.
Never. Number 4 is Credit Karma's resilience. It's a fantastic high-margin business, but it is highly economically sensitive. If the broader economy gets shaky, do people just stop applying for personal loans entirely? We need to see if that growth holds up under pressure.
Makes sense.
And finally, number 5, AI monetization. Are customers actually willing to pay cold, hard cash for these done-for-you agents? We need to see that translate into actual subscription revenue, not just metrics about hours saved.
It is definitely exciting times. It really feels like they are betting the entire farm on this massive transition.
They absolutely are. And just to summarize the whole picture, Intuit is being incredibly aggressive right now. They are aggressively pushing upmarket into the enterprise space. They are going physical with actual retail stores. And they are betting the house that AI agents will eventually do all the work for us.
A lot of moving parts to manage all at once.
It is. And here's the final thought I want to leave you with today. Intuit is fundamentally trying to become the operating system for money. Think about the scale of that ambition. If they pull off this mid-market shift, their total addressable market just explodes. They aren't just software for the little guy anymore.
Right.
But if they fail, if the AI doesn't stick or the mid-market rejects them, they're going to be stuck fighting for small business scraps against much cheaper, nimbler competitors. The upside is absolutely massive, but the execution has to be flawless.
High-stakes poker with high-tech tools. I love it. And, something to just sort of ponder on your own based on all this. If they actually succeed in becoming this single operating system for money, combining all your accounting, your tax data, your credit history, and your marketing data, at what point does that massive data monopoly become a target for antitrust regulators? It's just something to think about as they keep growing.
That's a very real long-term question.
And just a quick reminder for our listeners, the deep dive today was based on the Q1 2026 earnings call transcript and the excellent research report from Compasscope.
Always highly recommend checking out the original sources for yourself.
Absolutely. Well, that is it for today's deep dive into Intuit. Thanks so much for listening, and we will see you on the next deep dive.
This content is produced by Compasscope.com. For more than 1,100 public listed companies, find detailed research reports, visual mind maps, earnings call analysis, and audio discussions on Compasscope.com.